So just a brief recap. In the last three webinars that we've done, the first one was on idea development. The second one was by our noble Pastor Yomi Odukoya on team building. And the last one, the most recent one was by Anna Oyewole on the marketing and developing the right marketing strategy. So we just to kind of give you an what you should expect today, we're going to be talking about the finance side of it as well, and then later on in the webinar next week we're going to have the compliance side, and on the last session we're going to be having question and answers. So just to kind of just to reiterate, the purpose of the webinar again is we have discovered that the amount of university students that are coming out from university, that are graduating, is too much for the supply of jobs. So the demand for new jobs is overrun the supply in the market. And the whole idea is to encourage entrepreneurs to start businesses that would provide jobs for the future. And what we are committing to do is that any delegate that is interested, that based on the information that you have heard today, if you're looking to start up your own business, or you have a business within less than 5 or 2 years, we'll be able to help you to develop seed capital for your business. So that's part of the commitment that we are making to you. So like I said, we've done 3 webinars past. Today, we're going to be talking about Know Your Numbers. And then we have other consequent webinars coming up, just as I've mentioned previously. And just to introduce our noble speaker for today. Her name is Mrs. Miriam Shunaya. She's the HOD of the New Covenant Cherubim and Seraphim Movement Church. She's also a serial entrepreneur, even though she wouldn't like to admit it, but she's a serial entrepreneur in her own right. She has a wealth of experience advising C-level stakeholders on strategic financial management, both in the third sector, so charities, and in the voluntary space, and also in the private sector as well. So without further ado, I would like to welcome Mrs. Shunaya.
Good evening, everyone. Thank you for joining today. Like Brother Tolu just said, my name is Miriam Shunaya. Of course, I work at I'm the HOD of the New Covenant Church, which is my voluntary work that I do over the weekend. But currently, I work as financial controller for a television and communication company. That's what I do. Television and communication company in Soho. Before then, I've worked in several different organizations for the past 25 years, different, like literally from retail to travel agency to marketing to advertising company to search engine company, different companies. So I've kind of like been there, done that, it's about time I retire now. So today, we're going to be talking about knowing your numbers and budgeting in business. So when you're starting a business, knowing your numbers and budgeting. So I'm going to share my screen with you. Right. So knowing your numbers and budgeting. And from there as well, there's some other topics that we're going to be covering from there, which is cost of starting a business, budgeting, excuse me, profit and loss account, and cash flow forecasting. So what does it mean to know your business to know your numbers in business? It is very important to have a complete understanding of the numbers that drive your business. Whether you like it or not, your numbers, your accounts, your figures actually drive your business. Knowing your numbers allows you to make the right decision, intelligent decisions. Like, for example, maybe you think, oh, I've got my business now, I started my business is getting bigger, I need to go and get an office. If you don't know your numbers, you will make the wrong decision because maybe you cannot afford it. Or maybe you think, oh, I need to get another member of staff. Or maybe you're thinking, oh, I need to establish my business in a different country. But if you don't know your numbers and you don't know what is going on in your figures, you can make the wrong decision. And knowing your numbers will tell you whether your sales income is on track, whether your costs are under control, and how financially successful your business is. Next. So we're going to start from with cost of starting a business. So if you want to start a business, how much does it actually cost? This actually costs, this cost actually to set up a business, the cost can vary depending on, number one, your location, the industry you want to get into, whether you are selling a product or whether you're offering a service. So I've come up with the most important costs of starting a business. So let's say you've decided that, okay, I want to start this business today. This is what I want to do. And you've come up like, okay, this is the name of my company. What cost do you need to start that business? What do you need to start that business? So the first thing you need to do is you need to incorporate your company. This is very cheap to do directly through Companies House. It costs literally £13 and it's step-by-step application that you can just fill out online and do it. That costs you £13. But if you go to an accountant, it costs you more. They'll charge you, or there's some companies that will say, okay, let me set up your company for you. They'll charge you something like £100, which only costs you £13. Another cost that you need to bear in mind is your business address. So when you say business address, do you want an office address or you want a serviced office address? So business address, you can work from home and have an office address. This is also called a virtual address, where you can use them as your registered company address. So you can have your business, you can be doing your business from home, but then have an address in the city, for example, or Canary Wharf, or maybe in the West End. And once you register with them, that actually costs something about £79. Some of them cost £49 per year, not per month, per year. And then you can use the address as your registered office address, or when you're sending your invoices or when you're sending your proposal, you can use that address as your virtual address. And also some of them, they give you packages where they give you like 4 hours free. If you want to have meetings with your clients, they'll set up an office for you where you can take your clients to, free of charge. And then service address is where everything is inclusive. You've got everything in there, all your electricity, your internet cost, your business rates, everything is paid in there. And you know, your milk, your coffee and everything is included in your service office. There's quite a lot of them out there, although that one is more expensive. If you don't actually really need to be in an office, I'll suggest to do a virtual address office. And the next thing that you need to bear in mind is your marketing cost. Quite a lot of business, they tend to neglect this marketing cost in their budget because they're trying to cut down on costs. But marketing is very important as a startup company. If you're starting up a new company, you need to make sure, you need to sell your company basically. You need to let people know out there. Okay, we're in the world of social media, for example. And these days, quite a lot of people go on Facebook, Twitter, or Instagram. You can optimize that for your business to do your advert. So that costs you less than making adverts on Google or making sure that when they search your name, they see #1. So if you do social media, it's quite cheap to do that. The other thing that you need to bear in mind is business insurance. Also, I've seen businesses as well where they think, oh, I don't need insurance and just, you know, let it go. But you never know, anything can happen. So the smallest one that you need to do for business insurance is professional indemnity and public liability. And if you start to employ staff as well, you're going to need your employer's liability, and they don't cost that much. Normally, sometimes you can get insurance for £500 a month. Depends on the size of your company. And then if starting a business as well, if you're starting a retail business, you need to have money for stock, because that's your major thing. That's what you're selling to start your business. So you're going to need capital to start that. And then whether you're working from home or whether you're going to an office to go and work, or a service office or virtual office, you're going to need cost of equipment, which is your computer, office furniture, business phone, because you cannot use your personal phone for your business anymore. That's not tax deductible. So you have to get a business phone where that can be part of your cost. And then the last thing on my list is cost for an accountant, legal advisor, and accounting package. Now, the reason why I put accountant there is because when you start, if you're not an accounting person, to do budgeting and to do cash flow and to do profit and loss accounts, it can be difficult for you. So as a start, you can get an accountant to do that for you, and then just go on and set up an accounting package yourself. And then legal advisor as well, you know, everything legal, what's going on in the world, you need to know. So once you've spoken to your accountant and your accountant have spoken to you and tell you, okay, this is what you need to do, it can help you do your budget and your forecast. Some accountants and some legal advisor, they do this for free. The first consultation can be free. So use the opportunity to speak to them and do that. And then your accounting package is more than enough for you, because quite a lot of things that we do these days is actually on the cloud. For example, we're in this pandemic now, and for the past 3 months, I've not been in the office, and I'm actually, you know, doing my work because everything is in the cloud. Likewise, if you have an accounting package, quite a lot of them they are really small and cheap, from £10 to £15. All you need to do have you on your phone, and then, you know, you're good to go. You can be in America, or you can be in Nigeria, or wherever you want to go to, or be in France, and still carry on with business and know what is going on in your accounting. So I would suggest, you know, very important to get an accounting package. Quite a lot of businesses, what I've noticed is that they don't want to do accounting packages, they want to do spreadsheet. Spreadsheet is just limited. Spreadsheet is prone to mistakes, but if you have your accounting package, you see the mistakes, you can do everything that you want to do, and it's on the cloud, and you can take it everywhere you want with you. So that is the cost of starting a business. Before I carry on to the next stage, any question? Any questions? No? Yes? Any questions? Okay.
Sorry, Ma. We have one question here. Just a second.
Okay.
So we have two people raising up their hands. So Aunty Lola, I'm going to allow you to speak. Please go ahead and unmute yourself and ask your question.
Thank you very much. And my question is, Mrs. Shonaya, what accounting package would you suggest is the good one for a startup company? Okay,
there's quite a lot of them out there, and the cheapest one so far is QuickBooks. But then we have Xero, which is Xero is the same thing as they're kind of like similar to QuickBooks. So with QuickBooks, for example, that's £12. Xero is like £15. With me, I kind of prefer Xero, because Xero, I mean, QuickBooks has been around before Xero, for example, but then Xero knows quite a lot. They do a lot. That there's quite literally, there's nothing you cannot do with that package. Like, it will download your bank information into that package, and you take it everywhere you go with you, and that's about £15 a month. So there's quite a lot. I mean, I know quite a lot of people use Sage as well, and Sage has been around for a long time. Sage used to be the #1 accounting package, but these days a lot of people are going to cloud-based accounting package like Xero or QuickBooks, and then there's some other ones that, you know, popping up right now. But right now, the #1, the popular one is either Xero or QuickBooks.
Thank you.
You're welcome.
Okay, so the next person is Jonathan. Jonathan, go ahead and ask your question.
Good evening, Auntie. I just wanted to ask a completely different question. I don't know if it's that relevant, but it's to do with what would you say in terms of trying to set up your business? Would it be better to set up a business that you're actually interested in, or one where you know that the market's growing, or maybe there's a loophole in the market, for example, just something that's up and coming that you know that, okay, a lot of people are interested in, and then you jump into that rather than
So for me, personally, if I want to do a business, if I'm interested in something, I know I'll put my all in it. I'll do, because this is what I enjoy doing. For example, I'm doing accounting because I enjoy doing it. You cannot see me going to do law or go and do something else. So even though there's a market out there and it's very popular, it doesn't mean that it will be the same thing for you.
Mm-hmm.
You understand? It doesn't mean that, okay, because the market is popular, everyone is going towards it, and then I want to do it as well. It doesn't mean that. But if you've got some passion for something, you'll be able to know, okay, this is my passion, and then you have to make it work. Even though it's not popular just yet, but because you put your all in on it and it's like, okay, this is my passion, this is what I want to do. You have to, you make it work regardless. And that's my own personal opinion.
Okay. So thank you for that response, Mrs. Shonaya. Jonathan, I will also recommend, I think that's a very good response that Mrs. Shonaya has given to you, but you can always refer back to some of the sessions that we've done, especially the one on building the right business idea. And I'm sure that would also answer your question in much more detail as well. Okay. So over to you, Mrs.
Okay, so I'm going to go to the next segment. Now, the first topic on the list of things that we're doing today, we're going to talk about budgeting and budgeting control. So budgeting, what is budgeting all about? Why do we have to budget? Why? Why can't I just carry on doing my business? And, why do we have to budget? So budget is basically a financial plan for future activities. So you're planning. At the beginning, you have to plan. You're planning your life. This is how much I've got. This is how much I can spend. So it's basically a financial plan for future activities. It is a plan for saving, for borrowing, and for spending. So if you don't do this, there's a potential to miss opportunities and even expose the business to greater risks because you'll be spending more than what you've got coming in. And then I want to give you a tip before I go to my next slide. A budget, when you're planning a budget is actually a plan to spend less than what you're making. So for example, if I'm making £10,000, I need to spend less than that. So that is the tip when you're doing, if you want to start doing your budgeting plan, that is, the first thing that you need to put in your brain, kind of like back of the brain. I need to spend more, I need to have more and spend less. So let's see what budget looks like. I'm going to change the screen now. Don't be scared. So I've done like a dummy company. What is it again? Sorry. Right. So I did like a dummy company budget. So this is like a draft budget. Before you get to this stage, you would have done your other budgets, your departmental budget, like your sales department budget and your production department budget. And this is the main budget for everybody. So this is the main company, the master budget, we call it in accounting world. And then we've sat down, this is a draft budget that we've done, and we think, okay, this is a recruitment agency budget. And then we've said, like, in the month of July, we're going to make £89,000. And then the rest, everything here, that is our expenditure. So can I ask you one question? What do you think, looking at this budget right now, what do you think is wrong with the budget? Looking at it, just glancing at the budget, just like the way it is right now, before we start going one by one, what do you think is wrong with the budget? Anyone?
So Mrs. Okutubo said you need to reduce the expenditure.
Yes. Yeah. So basically, like I said to you, a budget is a plan to spend less than you make each month. So you need to spend less. So looking at this budget right now, okay, so we've said we're going to have £89,000 worth of income to come in. And then we have all these expenditure costs, you know, because it's a recruitment agency, they need staff. So there's some cost in budgets that they call it fixed cost that you cannot change. And then we have variable costs that we can change. So with the fixed cost, we've got wages, we cannot change that. Whether we sold more or we sold less, we have to pay our staff. So we cannot change that. Your rate and rent, you cannot change it. Your marketing, you know, that is like ongoing every month. You've got contract with your marketing and the advertising department. Insurance, you have to pay your insurance. Your telephone, you cannot change that. Accounting costs, you cannot change it. So now we look at your travel expenses and your entertaining. Those are the things you can change. And then, you know, although we've got contingency there to say, okay, come rain or shine, if there's any, in case of anything, we have £2,000 to play around with. But we don't want to touch that. But what we can touch that I think is like, look at the travel expenses, for example. Why is so high for £5,000? Maybe your sales department guys are saying, oh, you know, call me an Uber or call me, taxi instead of getting underground. We are in the UK. Underground is quite easy to use. So we could tell them, I'm sorry, we're going to cut down your travel cost. Can you travel by underground? If you start making more money, then we can use taxi instead. So right there, we can just cut that budget to £3,000. Remember, this is your draft budget before it's approved. So before that, that's when you need to first of all go through and make sure it's looking good. And then the next thing is staff entertaining. Why so high? Okay, we've got £6,000, and then when you find out from the staff, what do they call them, the hospitality department in the building, in the business, you said, okay, why do you have £6,000? Then they said to you, oh, you know what? On Thursdays, our sales department, they take each other out, for lunch because of to bonding, and then on Friday as well, everybody have drinks, and then it's a lunch day. The company buys lunch for everybody on Friday. I've seen this happening before. And then you said to them, I'm sorry, why do you have to do Thursday and Friday? So because of that, we cut down that budget as well to £4,000, for example. And then, we're making profit. We're looking to make profit. And that's 1,200. So that is the way you do your budget. Basically, this is all the cost, all the income that you're expecting to come in, and this is all your costs. This is your major cost, fixed cost, and then your variable cost that you can change and play around with. So that's how to make budget. And then you just go, you go on and on and on for the month of August, September, October, November, December. If you want, you can do the whole year, just one, or you can just break it down per month. Sometimes it's better to break it down per month, because that way you can compare your actual to your budget. I'm going to be showing you that next. So any question before I carry on?
So I believe Omobike had his or her hand up.
Okay.
I don't know if Omobike, you wanted to ask a question. Please send me a message. And I know that Ms. Falashe also had her hand up. So I'm going to allow you to ask a question now, Ms. Falashe.
Okay.
Go ahead, ma'am.
I just wanted to ask, really, is the budget really to help you know about your expenditure and cut it down, so you know what everybody is spending ahead of time?
Yes.
Because with your income, you might budget to say, okay, you would sell this, but what happens if you don't make that sale?
So if you don't make that sale, you cut down on your cost as well.
Okay. But it's more for the expenditure than the income, or am I getting it wrong?
No, it's for both of them. So if you're not getting that much income as well, you change this your budget. That's why it is budget. It's planning. You're planning ahead of what's going to happen. So it's not, you can change anytime you want. The only thing that you cannot change is your profit and loss account, because that's fixed. That's what you've spent already.
Oh.
So your budget, okay, let's say, because of this pandemic now, and then because of that, we couldn't send staff to the company that we're sending staff to. So we send £30,000 of staff, and then cutting down. So you have to go through everything, basically. So your wages and salaries as well. Maybe you would think, which is why the government is doing the furlough and saying, instead of you sacking people from getting rid of people from your company, we'll pay you 80% of that. So because of that as well, you just go through everything one by one. Your rent rates and service charges, there's nothing you can do about that. You have to leave that. Your marketing cost, maybe you cut down on your marketing cost as well, because you're not making as much sales. You don't need to put more sales out because of pandemic. Nobody can go out for the past 3 months at least. Yes.
So it's like a contingency plan.
Yes, planning. You're planning. It's planning. You're planning ahead. You're planning what is going to happen, what you think you're going to do, your company is going to do. That's what budget is all about.
So is it advisable to budget your personal finances as well, rather than just business?
Yes, 100%. So let's say your personal items as well. You think, okay, this month I'm going to get £2,000, and then from that £2,000, what are you spending the £2,000 for? So you have fixed cost, and then you have variable. Your variable cost will be things like, maybe every month I've decided, I'm going to treat myself and buy new clothes. And then, every month I said I'm going to have extra cost on my telephone bill, to do FaceTime or whatever. So things like that, because if you've budget set and it's not enough for you, you cut down on unnecessary cost. You cut it down, basically. So things like, I've suggested I'm going to buy clothes for myself. If you don't have the money, you don't have to spend it, you cut it down. If I want to buy extra data on my phone so that I can do FaceTime, you don't have to do that. That is not necessary. It's not a matter of life and death. So it's good to, for your personal life as well, it's good to do that. And then say, okay, I'm going to save some money as well during that.
I think it's good for us to know that earlier. I mean, if I knew that earlier, rather than I spend, when the money is in a bank, I spend it. If it's not there, then I know, okay, I don't have the money. So
yeah, that's what I'm saying.
I don't think most people don't.
When we get to the next stage, I'll show you, because that's in cash flow forecast. So this one is like, okay, I know every month I get £2,000 per month. So that is coming. So for the month of, this is month of July, for example, I'm doing, and then in month of June, you'll be thinking, okay, in the month of July, I'm going to get £2,000. So when you get £2,000, okay, what are my costs? So you're planning ahead. You have to plan. That is for planning. Budget is basically planning.
Thank you very much. Thank you.
You're welcome. Any more?
So I think that's, hold on a second. Let me see if there's a question here. Okay, so I think that's all the questions.
Okay.
Yeah.
So I'm going to go to the next slide. So we've talked about the budget. Now we're going to go into profit and loss accounts. Now, I know this is why it gets tricky. Like I was just saying to my sister that, budgeting is planning. Your profit and loss account is actually your actual, exactly what has happened. You've spent this money already. No, it's not spending money. This is what you've done. You've spent it, I beg your pardon. Yes, you have spent the money already. And then this is what your sales invoices that you sent out. So your profit and loss account is actually, is your actual revenues and your expenses, the actual invoices that you've sent out to your clients to pay, and then the expenses that you have to do in a month or you've done in a month. So your P&L is fixed and shows what is actually happening in your business. This is like in real time. This is what's happening in my business. Yes. So I'm going to show you an example of P&L as well. Right. This is your P&L. I don't want to show you that yet. Can you see this?
We're still on the budget.
No, this is P&L.
So try stopping sharing and then share again.
Okay, here we are. This is your P&L. So that's why I've put the actual there. I don't want to put the budget yet because I don't want to confuse you. So now your profit and loss account looks exactly the same where your budget is. So basically, this is just the actual, and your budget is your forecast. So when we look at this, you notice that I've put the budget cost in there, which is what you need to do every month. So even though we budgeted that we're going to have 40,000 worth of permanent staff, we didn't.
Sorry, Mrs. Shonaya. Sorry, we are still seeing the previous page that you showed us before. So,
Okay.
yeah.
There we go.
Also, we can see it now.
No, this is still this old one. Can you see that one now?
So we can see the profit and loss account
Okay.
for the period ending 31st July 2020.
Okay. Right. So this is the P&L account. So what I've done now, I've actually put the budget on there as well. And from this, you can see that, okay, we've budgeted that we're going to make £40,000 from permanent staff. We didn't make £40,000, we only made £35,000, and there's a difference of £5,000. And then from the temporary staff as well, we said we're going to make £27,000. We didn't, we made £26,000. So this is what we call budgetary control. Now, because you've put your budget there, your bookkeeper came to you and said to you, okay, this is the actual amount that went through the account this year. And then you are now comparing the budget. And then you need to find out, okay, so why didn't we make that £35,000? Why, the £40,000? Why did we only make £35,000? You need to speak to your sales guys. What happened there? So your sales guy might come to you and say to you, oh, you know, I thought they're going to bill us, we're going to be able to send them a permanent staff for another £5,000. That did not happen. And that's why, you know, we didn't do all the £35,000. That might happen next month. And then also, same thing applies to your temporary staff as well. Oh, you know, your temporary staff, you know, some of them didn't go to work today. And because of that, we couldn't bill the clients for that. And that's why you do your budgetary control to find out, okay, this is what we've budgeted for. Why is it less than what we've budgeted for? Also, we go through the cost as well. You need to see what has gone up and what has gone down. For example, we look at this. If we look at the wages and salary, that has gone down by £3,000. Even though I said to you, wages and salaries, they're actually fixed cost. But the variable cost out of that wages and salaries is actually the commission. So because the sales guy did not sell the extra £5,000, he's not going to get the commission. So because of that, the wages is down as well. And then you have your telephone and internet as well. Why is the telephone and internet less than usual? Maybe before, sometimes they go overseas and then they use the phone there. And then this month, they've decided, okay, maybe they didn't go overseas. Because of that, the telephone is less. And then the office sundries. Okay, maybe it's getting to summertime now. They're not drinking milk and tea that much, they're drinking water. So, and so on and so forth. So overall, even though we've lost, the sales is less, which is less by 5,500, the cost is also less by 3,250. And overall, from what we budgeted, we made a loss of 2,250. So the reason why you look at is important for you to look at your figures every month and see what is going on is because so you can make proper decisions. So don't think, okay, I've got £20,000 in my bank account, I can just spend it. No, you cannot, because your profit and loss account is telling you that no, you didn't make that much you didn't make profit. The month of this month, you've made loss of 1,050. Maybe some of the cost in here, you have not paid all of it. And then if you think, oh, I've got £20,000 in there, or you know, I can just blow them. And no, you cannot until you look at your profit and loss account and make sure you know what is going on in your business. This is why it is important to know your numbers, to know what is actually going on, the true picture, not what is in your bank account. Any question? Any questions?
Not so far.
Okay. So basically, I'll tell you again, difference between profit and loss account and balance sheet is your profit and loss account and budget is your budget is your planning, and your profit and loss is your real time, your actual what's going on in your company, what you've spent and what you've received.
Sorry to interrupt, Ms. I just seen a question here. So someone, Patience is asking, is this all the job of the accountant? So whose role is this to put the P&L together?
You know, like I said to you, that the accounting package, if you have an accounting package, and basically all this information, it doesn't happen in a day. It happens throughout. Like, okay, I've got invoices, I've created an invoices. Your bookkeeper or your intern can do this. So they put all the information together, and all they need to do is just click on the button and, okay, I want to see my profit and loss account, or I want to see my balance sheet. And then what they need to do is to come and show you. And that's why I said, as a business owner yourself, you need to see what is going on. You cannot just leave it for your accountant to do. You know, I know the business owner is busy, you know, focusing on getting more sales, or, you know, what the next product he wants to sell or to make or something. But then you need to spend time, even if it's 15 minutes in a day, in a week or something. Sit down with your bookkeeper and go through your account and see what is going on, to see the true actual picture. Your accountant, if you give this to your accountant to do, I'm sorry, you'll be wasting your money, because they will charge you, number one, when you can get an intern to do or a bookkeeper to do in-house for you. They do that for you, and then all you need to do is look at it every week. You have to find the time to look at it yourself. You have to find the time. Even though if you have an accountant that's looking at it for you, they might not give you the true picture. You have to find the time and spend it, even if it's just 15 minutes every week. Sit down and look through and make sure this is what, you know what is going on in your business. Does that answer your question?
I believe it does. Patience, if you have a follow-up, please feel free to write it or raise your hand. Okay, I think we can continue now.
Okay. So I'm going to go back to the last item on the topic, which is the cash flow forecast. So like I said to Brother Wole when I was doing this, I was saying to him that it's too much. If you're not an accounting person, to first of all know what budgeting is, and then know what profit and loss account is, and then know what the cash flow is. So they all have different things that they do. Like the budget is your planning. The profit and loss account is your actual what has happened. And then your cash flow forecast is like, okay, I've done all the business. You know, I'll describe this as your cash flow forecast, as your liquid cash forecast. So you say to yourself, maybe I have, when I started my business, for example, I've got £20,000 capital or savings that I'm going to start my business with. So once you start your business and then you start selling products and stuff, you've got some money to come in from sales, you've got some money to come in from somewhere, you add that to it. And then you see, you go down through your expenses and say, okay, who do I need to pay? What do I need to pay? And see if your company can afford it. And then this cash flow is, you know, is actually very, very important. It helps you to understand when cash will come into your bank account, and then to leave it there, not to spend it. Because even though if the cash comes in there, you've got bills to pay. So I'm going to just show you an example. What I didn't do anything for cash flow. I just want to show you what that looks like. Then, you know, a template basically. Can you see it?
Yes, we can.
Okay. So this is what a cash flow forecast looks like. I've not put any figures in there. And then I would like to say to you as well, when you do a cash flow forecast, it's better for you to just do it for 1 year, because there can be some uncertainty. Like, let's say you're expecting £10,000 from one of your clients, for example, and then you think, okay, they're going to pay, you know, in January next year, or maybe pay in December. What if that company goes bust and they can't pay, and you put in your cash flow already? So your cash flow is just like your liquid cash, what you think you're going to, that is going to come in for you. So I'll start and show you from the sales. Sales is like what you've built already from your profit and loss account. You've built that, you've sent that invoice to your clients. And then you go through your age debtors list and say, okay, this is one is going to pay in 30 days time. That one is going to pay in 60 days time. So for example, let's say when we did the £40,000, one of them said to us that they're going to pay, in January, they'll pay £10,000. So you put that there. And then in February, they're going to pay £20,000. So it's what you're expecting to come in for you. You're forecasting your cash, your liquid cash, that this is what I'm expecting to come in for me. And then let's say you started the business and you're thinking, oh, I actually cannot afford, you know, I need a loan, basically. And then you've gone to your bank, you've spoken to your bank manager, and your bank manager said, okay, how much do you actually need? So after doing your cash flow forecast and see, okay, this is all my cash flow forecast, this is how much I need to spend, I need to do salaries, I need to do this, I need to do that. And then, you know, you're thinking your loan is going to come in May. You put it in May. And so on and so forth. And then you just go to your, you know, basically everything that, okay, this month, maybe salary is going to be £5,000. And then by the month of March, I'm going to have another employee and employ more people, and it's going to cost me £10,000. So you just need to pull your cost according to your cash flow that you think is coming in for you. Or let's say, you know, in the month of March, I'm only going to get £10,000. And then when you get to the month of May, for example, where you think you're going to get the loan, and you decided, okay, I'm going to get the loan there. I've got £10,000 coming in. I've got £10,000 to come in for me. And then what you need to do is like, okay, how am I going to spend that £10,000? Do I need to get a new office? Do I need to get employ more staff? So what you just need to do is that from that £50,000 I've got from the loan, you break it down as, okay, this is what I'm going to spend the money on, basically. And that's what your cash flow looks like. Any question?
So there's a question here, but not on the cash flow side of things.
Okay.
We just wanted you to speak more on the accounting package, and also to kind of see the difference between the accounting package and the accounting softwares as well that we can use.
Okay. Like I said, the accounting package, I will highly recommend Xero. And the reason why I use both. Basically, I've used both before and I'm still using them. And with Sage, I've used Sage before as well.
Okay.
With the accounting package, the reason why I'm recommending Xero is because it's user friendly. With QuickBooks, you need to kind of like be an accounting person to be able to use that sometimes. But Xero is so straightforward. Like one of my clients that I'm working for, he actually set up that Xero package because even though it's not an accounting person, he was able to set up that Xero package because it's so easy, so straightforward. And, you know, because it's in the cloud as well, that's why I like it. And then what I like about Xero as well is because basically it connects to your bank account. And then let's say things has happened this today. By the time you wake up the next morning, everything that happens in your bank account will download to your Xero, to that package. So for example, there's sometimes that I've been, you know, I went to Nigeria on holiday and I didn't take my, I couldn't log into the bank account. But then the information that I needed, I can get it from the accounting package because the accounting package has downloaded the information the night before onto the accounting package for me. So I can see everything that's going on. So I love Xero. It's not that I have shares with them, the way I sell Xero to people, but then it's so easy, it's unbelievable. And like I've said to several people and several startup companies as well, is the fact that if you leave everything to your accountant to do at the end of the year and you give them your books to do, they'll probably charge you about £600, £700. But if you have that accounting package yourself, you can literally do everything on the go. You don't have to be in your office. You don't have to be in the country. You can do everything on the go, like even on your phone. It's downloaded to your phone. You don't have to have your laptop. Just pick up your phone and it's there. Your receipt as well. You can take a picture of it, scan it. It will take a picture of it and then put it on your Xero package for you. And that's why I kind of prefer Xero to QuickBooks. QuickBooks, you need to have a little bit of accounting experience to be able to work that. But Xero, you don't need an accounting experience to do that. Does that answer your question?
Amazing. Yes, it does. And what's the difference between a profit and loss account and the cash flow? So what pictures do they, is there a variance in the picture that both of them do give? And do they serve different purposes?
Yes, they do. So your profit and loss account is actually what you actually use to file your account when you're filing your account with the company's house, for example, or, you know, and then profit and loss account is more of, it still accrues. You basically, even though you've done your sales, but you've not received the cash. Even though it's like, it's actual cost, but you've not received, the cash has not coming into your bank account. But then your cash flow is more, sometimes when you go to the bank as well, like if you want to go to bank and they'll say to you, okay, they probably won't ask you for your profit and loss account because that's actual. They'll ask you for your budget and they'll ask you for your cash flow forecast. And they'll, you know, they want to know how much you have and how much you're expecting to come, for example. So your cash flow, your forecasting is your liquid cash. So that's the difference between the two. The profit and loss account is your actual, what has happened and you've not received the cash yet. But then from your profit and loss account, that's where you get the figures for your cash flow. That's where you pick your figures from. Like, okay, I've sold £10,000. I'm expecting that £10,000 to be paid in 30 days time. And that's why you use to forecast your cash to say, this is the amount I've got coming in. Or you've got invoices from your suppliers. They're giving you invoices to that they need to do, but then you're not paying them until 30 days time. So even though it's in your profit and loss account, you have to put in your cash flow to say, I need to pay this in 30 days time. So that's the difference between cash flow and profit and loss account. And both of them, you need, you know, one of them is just your liquid cash, and the other one is just your accruals, your actual what's happening in your business.
Amazing. I believe that answers the question. So you mentioned when you were talking about the cash flow that that you recommend that they only do a cash flow for a year. But how do you then remedy a request from a financial company or financial institution that wants to give you a startup loan, for example, asking you for a 5-year cash flow forecast and things like that? And how do you actually, so there are two questions. How do you then plan the forecast? What are the factors that you put in play in order for you to have at least a near enough forecast of both your cash flow and some of your other financial instruments as well, like your budget and P&L? How do you do that?
Okay, so of course they ask you for 5 years, and they do know that that's very unreasonable. Even though if you put the figures there, it might not happen. You don't know what's going to happen. Basically, you've done your sales, for example, it's supposed to be your liquid cash, and you're forecasting to say, or maybe you've checked your trend of, okay, this time last year, this is how much I've received. This time last year, this is how much I've received. And then for that, you now use that to forecast your cash that's going to come in. You use your profit and loss account to see, okay, this time last year, this is what has done, this is what has happened. And then you use that to forecast your cash. But then if you do it more than 12 months, you don't know. Even though what happened last year might be different to what's going to happen this year. Like I kept saying, look at the pandemic, for example. Nobody knew at the beginning of January that we're going to be in this situation. So let's say you've done your cash flow and you said, oh, in the next 3 months, in the month of March, April, May, I'm going to get this much, that much in. And then that's not going to happen because, you know, practically everything is closed down. Or even maybe some of it, you've gotten half of it. But then you use your, what has happened last year. And then if like it's a startup business, it's a new business, what you need to do is like you do your market research, you do, you know, trend and see what's going on in the world. Like, okay, this is my product, this is the product I'm selling. What is the trend for that? And that's how you put that figures together. Does that answer it?
It does. So what are the controls that we might need to put in place to kind of address some of the financial risks that we might face? So for example, we forecasted even if it's for the year and then something happens mid-year, like what has happened with the coronavirus, for example, and has now affected our 12-month plan. What controls can we put in place to minimize any potential financial risks that we can face as a business?
From my my experience of what I've done before is like you have contingency plan. So basically, when you're doing, like you see from the budget that I did, I put contingency of 2,000, even though that's a small amount. Some companies will put large amount of money in there. There's one of the companies that I work for. So basically, they pay on profit basis. So instead of paying them all that profit, they take some of that profit out. They don't give them all of it. So let's say the profit share is supposed to be £25,000. They only give them £20,000 and keep £5,000 as contingency for situations like this. So that's how the reason why you have contingency. You put some money in the pot, basically they call it. You put some money in there that, okay, unforeseen circumstances, this has happened. This is what we're going to fall back on. And I think that's the only way you can do it.
Okay, amazing. So what percentage of the yearly budget would you advise an entrepreneur to plan as contingency?
Depends on the industry and depends on, there's some businesses that they're actually high risk and there's some businesses that really, really low risks, for example. So, generally we do maybe like 10% of your total budget and say, okay, I'm going to put this as contingency just in case. And then if we don't spend it, you don't spend it, the money is still there. But depends on your, if it's a startup company, 10% might be too much. Maybe you cannot afford to put 10% in there because you're still trying to, you are still trying to break even, not to make profit. So if you're not breaking even and you're putting £30,000 in your contingency, it's going to throw you out completely. So as a startup company, start up with maybe 5%, and the contingency is just there anyway. You can change it anytime you want.
Amazing. Thank you so much for that response.
Okay.
Now, for an entrepreneur out there that is thinking that, okay, this all looks good, and I know that you've said that there needs to be some ownership or a lot of ownership from the business owner themselves in terms of managing the accounts and putting in all these figures in there. But hey, I'm not a numbers person. Do I need to do an accounting course in order for me to be able to do all this technical stuff? Because though it might look mundane, but for someone that is not really a numbers person, it might look very, very technical. What advice would you give someone like that to approach accounts?
If you're an accounting person, if you've got a business and you don't know, okay, you're not an accounting person, you want to be creative and do this and do that. As a startup, I'm sorry, if you have to go and do like a online course or something like that, you have to sit down on one evening and sit down and learn accounting. I'm sorry. There's no easy way out. Otherwise, even though if you don't know what's going on in the account and they give you the paper, oh, this is my profit and loss account, you cannot read it. You don't understand it. So you need to, if you have to, I know from quite a lot of people from university, they do teach them accounting, no matter what you're studying, even though if you're studying law, for example, they do teach you accounting because they know when you get to the business world, you need to know what's going on in your books. And, there's no point in you getting a bookkeeper anyway. There's so many people that start up company, they might have an intern to come there and come and do their books for them, enter this and do that and sit down there. But, after when they finish all that, they give you your profit and loss account and balance sheet and say, oh, here you go. And then you don't know what you're reading. You don't know what you're looking at. You could be looking at gross profit as your main profit when your net profit is less than your gross profit. So you need to know the difference between the two. Or, there's so many courses out there that you can do that it's not going to take so much time just to have the knowledge. And then once you start doing it, you understand it. Okay, this is the important part. This is the one I need to know. I need to know the net profit. That's, overall profit of my company, or my budget is too much, or this, you need to know certain numbers. Not all of it is very important, but certain number, like your net profit, for example, that's the profit you're making, not the balance in your bank account. So you could have, like I kept saying, you could have £20,000 in your bank account and then your net profit is showing minus. The reason why you've got £20,000 in your bank account is because there's some payments you've not made yet. And once you start making those payments, your balance is going to be minus as well. So you don't go out, start spending. Oh, I've got £20,000, let's start spending. You know, you're heading for a disaster.
Amazing.
Yeah.
Amazing. Thank you so much, ma'am. And also, when as a startup, I know that you can always leverage using interns, working with an accountant. At
Yeah.
what point should an entrepreneur know that they actually need a CFO? I know when Mr. Jomi Odukoya spoke about identifying and building the right team, and he was listing out some of the core managerial teams. One of the managerial roles he mentioned was the role of a CFO. At what point would an entrepreneur know that they actually need a CFO to control the finances of their business?
Okay, so I'll say, well, I mean, like I said to you, I've been working for 25 years and I've worked with different scale sizes of companies. And then from that, the so many companies I've worked with, maybe it's only 2 of them I've seen a CFO in there. And I'm saying I've worked with a lot. So I think the stage of having a CFO will be when you maybe let's say when you have about 100 staff in your company, number one. Number two, maybe your accounting setup is actually complicated. Maybe you have shares that you need to distribute and things like that. You need a CFO for that. But if you're doing your day-to-day accounting job that you're doing, you can get, from intern, you go to a bookkeeper. From bookkeeper, you have a finance manager. From finance manager, we have a financial controller before getting to CFO or finance director. And then, CFO and finance director, they don't come cheap, I'm afraid. They start from £500 an hour, I'm telling you. So you need to think twice that do you actually really need a CFO? Or if I've got my accounting, because if your accounting is not complicated, if it's straightforward, if you don't have more than 100 staffs, for example, or you don't have shares that you need to distribute or move from one place to another, or you've got different companies, you've got different branches everywhere. Let's say you have your branch here and then you've got another branch in America, you've got another branch in Spain, you've got another branch in Nigeria. You might need a CFO to consolidate that together for you. But even the CFO doesn't need to be a full-time. The CFO, the one I've worked with, comes in once in a month. And I was working full-time, basically doing all the work. And when I finish the work, there you go, give him the management account. And then that's when he puts it together in consolidation and, distribute the shares and profit share and everything. So that's what I think.
Amazing, amazing. So I'm not seeing any questions coming up yet. Does anybody have a question? Please either raise your hand or send me or put a question in the chat. If you have a question, please raise your hand or put a question in the chat. So I'll hand it over back to you.
Okay, so that's the end of my presentation, basically. The cash flow is the last one.
Okay.
And I'm done.
Okay, so do you have any final words of advice or guidance to give to the entrepreneur out there that is actually starting out and looking at the different complex financial modules, for their business, and what will be their first step?
Their first step will be to be organized and plan.
Mm-hmm.
Plan what you want to do. Okay, so this is my product. This is what I want to do. This is how I want to sell it. This is, like I said from the beginning as well, do I need to get an office? Do I just need a virtual office that is cheaper? Write down everything. Even though if you have to get a spreadsheet as a start, write everything down. That, okay, this is how much it's going to cost me. This is how much I have. So you have to plan and organize yourself before you start that business. And then one thing that you need to keep reminding yourself is like the bank account balance is not your real balance. I kept saying that the bank balance is not your real balance. And always be aware of the figures. Always be aware. You have to. You don't have a choice. You do not have. I know. Entrepreneur or startup companies, they focus more on sales, how much I'm going to sell, or product, change my new product and everything. But you need to focus on the accounts as well. You need to know what is going on so you can make proper decisions.
I'm sorry, before we go, Patience is asking, are there specific courses that we can take, or do we just try to learn the basic accounting course, or are there specific courses that you can recommend for those who want to learn accounting?
I'm sure there'll be quite a lot of them online. You can do basic accounting. Basic accounting is more than enough. All you need to know is understand your profit and loss account and understand your budget and your cash flow forecast.
Amazing.
And
I think
balance sheet as well.
And I think LinkedIn are doing a lot of courses now that we can all leverage. You can also look on Udemy. There are a lot of courses on there. Sometimes they do a lot of offers where you can buy a course for £12 or £10 that you can look into as well. That will be very, very helpful.
Yes.
You know, in your journey as an entrepreneur. And I think it's also something that you need to keep on, because I feel like the journey of an entrepreneur is a never-ending one.
Yes.
So you just need to just keep looking at it and always looking at areas, even going back to some of the things that we've already covered. There might be some other courses as well that might go in a little bit more detail, you know, a full brand courses, because we've only done it in about an hour or so. But they might be able to go even in more detail and break it down for you and provide that guidance, and something that you can always refer to in for future as well. Okay, so Mrs. Shonaya, we really appreciate you coming on board and walking us through this. So everyone, we were supposed to actually do a second talk today, but I've decided to postpone it to next week, because I know that when it comes to numbers, even though this was a shorter session, I know that when it comes to numbers, it can still be quite a lot for us to take in. So I don't want to add more or to what we're going to learn today. I want us to actually go away and reflect on it. So next week we're going to be looking at the compliance side of things, and then I'm also going to be speaking about how we'll be working with entrepreneurs like yourself who might be interested to actually take the first step immediately. How we'll be working with you to help you to raise funds, the different fundraising mechanisms that are out there that we can guide you to get. So we really say a very, very big thank you to Mrs. Shonaya, and we look forward to seeing you all next week, same time. See you soon. Take care.
Thank you.